So I'm Jason Carrion. I'm from Quartz, our Europe editor here in London. Thanks very much for having me. And I'm delighted to speak to Neil Reimer, the co-founder of Index Ventures. Most of you probably know Index. If you don't, but big early investor in Funding Circle. Other relevant investments would be like TransferWise, Adyen, and then there's others like Dropbox, Betfair, Supercell, name them. So if you don't know Index, you definitely should. We're here to talk about the state of the industry from your perspective. Absolutely enormous topic. We heard from the FCA earlier that it's been a very noisy year, was the quote there, and that noise can be exciting, but it's also dangerous sometimes. So I figured to begin with, from your perspective, I mean, where does lending fit into Index's kind of overall industry screen? Is it a high priority for you guys? I mean, obviously Funding Circle has been a big success, but how bullish are you on the industry, and where does it fit in your list of priorities?
Yeah, so I guess we, for the last 10 years, have been really excited about seeing how entrepreneurs are transforming other sectors of the economy. And when I say other, I mean moving away from the traditional, the low-hanging fruit maybe 20 years ago, which was digital goods and entertainment and some sort of nice-to-have services, to things that are much more mission-critical, like healthcare, like transportation, like financial services. So financial services has been something we've been looking at for a while. Actually, there was no fintech terminology when we started investing in companies like Climate Corporation, which was weather insurance. So you have to be interested in financial services because it's one of the biggest industries in the world. And when you look at financial services, lending is one of the biggest markets. And I like to try to remind myself when we're looking at different investment opportunities, they all have an equivalent chance of failing. And if they fail, you lose your investment. But if it works, and you have to ask yourself, what happens if it works? Some companies will aspire to be, $1 billion in value, and some companies will aspire to be $100 billion in value. And based on the size of the markets that they attack, and very few can legitimately aspire to be valued in the tens or hundreds of billions. The lending market is trillions of, pick your favorite currency. So that's a very big market. So we have to be, by definition, we have to be interested in it.
Yeah, and so without tipping your hand too much, within that enormous market of lending, where do you see some of the biggest opportunities as an investor? What's currently pricking your ears and your eyes up?
Well, I think we're still in the early innings of this. I mean, Samir said this morning that we're entering a golden age, and I subscribe to that idea. I think that on the investor side, people are recognizing that this is a real asset class that has depth, that has consistent returns, and in fact, in a world where returns are very scarce, yields are very scarce. But I also think that borrowers are realizing that this is just a better way to finance their businesses. I'm talking about businesses rather than individuals. I still think that has a very long way to play out. Most people who run small businesses aren't aware of this as an option if you were to poll them, in the world at large. And I think that this will become part of the toolkit that any business owner will use, but also there will be multiple products. Funding Circle, as an example, is primarily doing one type of loan, but over time, there's no reason why they shouldn't be able to do other types of loans. So I think that that will continue to expand. We're very interested in business lending. I mean, we are investors in some consumer lending businesses, and we like that, but we feel that is a tougher business to grow in. It is much more competitive right now.
It's crowded.
And it's hard. It's hard to see a consumer being a repeat customer. In fact, you don't want a customer a consumer to be a repeat customer. Whereas it's easy to see how a business could become a repeat customer because there are lots of other things you could sell them.
Right. And you were hinting there, I mean, maybe even beyond kind of straight bank loans like we've seen now. What else within that realm of business lending, quote unquote, is particularly exciting for you?
Yeah. So lending against the assets of a business, the working capital. So you could lend against receivables, you could lend against assets, you could help them finance asset purchases. More generally, though, I think there are trillions of dollars or pounds tied up in working capital cycles by businesses that have to pay early and collect late. And usually, if you look at the kind of hierarchy of contractors, the biggest ones get paid first and the smallest ones get paid last, and that's backwards. The smallest ones need the liquidity most desperately. And so, figuring out some way of unlocking that capital, exposing those cash flows to willing investors, institutions and otherwise, to finance that and to kind of remove the friction would be a huge market. So that's basically supply chain finance, which to our mind is still largely untouched.
And so do you see some aspect of P2P being particularly well suited to that area?
I mean, it's not an easy thing to do because you kind of have to be able to track every pound through a system and look at invoicing and look at receivables and have it done in some sort of consistent, discoverable way. But if you could do that, the small business is going to get paid by a much bigger business or by a city council or by a government, which is a pretty good credit risk. Mm-hmm. And there are lots of people who would be willing to take that risk. And God knows the small suppliers would like to get that money faster. So if you could figure out a way of doing that, absolutely you could make it a peer-to-peer marketplace, and you could also allow institutions to participate.
Yeah. Is that happening? Are you getting pitches on this? Do you think the industry has?
We've seen some things.
Okay.
We've seen some things. I mean, entrepreneurs are clearly aware of this opportunity. It's not easy for the reasons I mentioned, where some entrepreneurs come at this, I think, in not the ideal way, where they're thinking about use my software. The only thing you have to do is make sure everybody in the supply chain uses my software, and everything will work. and that's not going to scale. So that's hard, right? Where you have to kind of boil the ocean and get everybody using your software. Other companies have done an interesting job of doing this in specific verticals. So they know an industry particularly well, a sector. They understand the intricacies of the cash flow cycle in that industry. They build a piece of software that they give away to that industry to run that, that cycle, and on the back end, finance the cash flows. That's interesting, but those are sometimes niches, right? And you want to find the bigger sectors, but I believe that we'll start to see those things.
Right. I mean, this is a very kind of high-touch area too. I mean, what chance do kind of fintech upstarts have against incumbents in as we push into the more sophisticated products, let's say, or things that are the less low-hanging fruit,
That's interesting. I kind of think about these, competition for startups comes in waves. The first wave is typically everybody else who wished they'd had the same idea, and every other investor who wished they'd invested in the leading player, and so a bunch of companies get funded to go after a vision that was really articulated by one or two companies that had that vision. So the first round of competition is all of those guys fighting it out with each other, and a lot of money is lost. But the one or two players typically emerge, and the also-rans go off and do something else. The second round, is typically, so if this market has been validated as a big one, where it's worth building a business, The second round is usually where some of the incumbents get smarter and say, okay, we can't let this thing become a monster. It's happening on our watch. How do we respond? And I think we've seen that. We're seeing that in different industries playing out in financial services or in lending. I don't think we've really seen the incumbent's best shot yet. I think some of the companies, maybe some of the credit card companies or some of the non-bank lenders will get their acts together and say, hey, this is our business. We have data on hundreds of thousands of businesses. We have a billing relationship with them. We see their flows. Can't we do better than this? And I think they'll take a shot at it. But the more intricate these products get, and the more in the weeds and the more domain specific, the harder it will be for those guys to follow. And I think that's where the leading players who set this up from the beginning will have a couple of hours of a head start, years, I hope.
Right, yeah, indeed. We heard from Reinder earlier too, who said that most platforms haven't been around long enough to experience a recession. Would that potentially be an interesting event that's coming up? We talk about this wave of competition from the incumbents maybe hasn't come, but we also haven't had a proper downturn for a lot of these people too. So that it sounds like those are both kind of looming.
I mean,
risks. How are you thinking about that?
I'm not wishing for a recession to
shake out.
Yeah, to solidify the business, the business model. I think that this year has not been an easy one for players in this industry, particularly ones based in Europe or the UK. And they've had to deal with some important changes and shocks. But yeah, none of these businesses have, other than Zopa, which has been around for a lot longer. And so that data is kind of interesting, but it's a single sample set of one. It would be good, I think, for a segment of the investing public to recognize that these things do adapt and pricing adjusts and spreads adjust in a recession or in a rapidly rising interest rate environment. I think most people are willing to make that leap of faith, or at least look at the data, the historical data, and jump in. Regulated status will also help that at some point. I don't think that's a necessary thing at this point. When it comes, it'll come, and I have no doubt that the platform leaders will deal with it.
Right. We talked a little bit about the consumer space a bit earlier. Could we just go into that in a bit more detail? Didn't sound like you were as keen on consumer lending as business lending. It's crowded. There's some reputational issues at the moment with people like Lending Club and that sort of thing. I mean, but there's obviously still, like you said, it's an enormous market, so you can't ignore it. Within that, what from your sort of VC lens is most interesting to you, or the part where you're staying away?
Yeah, so I probably didn't give it a fair shake. I mean, we're still big believers in it. Our biggest investment in consumer lending is a company called Ox Money, which is based in Düsseldorf, and which is the leading direct lender to consumers in Germany. And that's not an easy market to figure out. I think they've done a really good job of figuring out how to lend in that market, and it's scaling nicely. I think that there's a lot that can be done to improve that experience for individuals. Most individuals just really don't look forward to going to a bank and asking them for a loan. It's going to be painful. It's going to be humiliating, and it's going to end in a no for most people. And it's going to take a long time, by the way. That's the privilege that's what you have to look forward to. So I think that can be improved. I think that you can grow a big business there, and you have to adapt it to every geography that you go into. The laws are different. Sure. The cultural practices are different. The willingness of banks to lend to individuals is different in each market. And as I said earlier, consumer lending is you don't necessarily want that to be a habitual thing. There's a place where these two markets overlap, which is where consumers are also businesses, sole traders, family businesses, that kind of thing, and that's an interesting segment of the market as well. But there are a lot of things that can be improved there. I also think that the banks are less likely to give that up over time because they need that business. There are a lot of different products that they want to continue to offer to their customers. And someday you're going to want a mortgage, and that's their moment to kind of marry you forever by giving you that mortgage that allows you to buy that place that you need or that you decided you want. So it's just a different business. I also think you can build great businesses there. In the U.S., I think it's a very crowded market, consumer lending, and unless somebody has a very radically different way of doing it or is going after a different tier of the market, I think that's going to be hard. In Europe, I think it's still relatively wide open from a kind of global perspective because companies have focused on one or the other national market first.
Yeah, great. And so with the time we have left, I just wanted to step back a little bit. This is a venture capitalist state of the industry. I mean, Samir mentioned earlier you shouldn't underestimate the power of a brand. Talking about acting more like a tech company than a financial company. I mean, when you're getting pitches, when you're filtering out investments, brand is important, obviously. Data must be important. When you're looking in this market in particular, what is like in your filter that you can share with the audience here, some of which you're probably looking for funds? I
mean, I think that data, the fact that, Samir put up a slide with that virtuous circle, which I think is very powerful, and it's absolutely true. The more data you have, the better you can, the faster and the better you can rate and underwrite, the more likely you are to have happy borrowers, people who get accepted, and then and the more effectively you can acquire customers because you know what your investment in advertising or in traffic will bring you, and that again brings more data, right? So it's very, very powerful. Starting from scratch, and obviously brand is what you is the story you tell around that experience and the story that you attach to the experience that borrowers get, to the returns that investors get. It gets harder and harder for somebody to break into that because they're starting from scratch. So they may have a great brand or they may have a great idea, but unless you can get the data, unless you can actually make some bad loans and learn what doesn't work, you can't really tune your models and you can't get big. So, but then again, if you're starting from scratch, and there are no competitors, you have the time. When Funding Circle started, they started with zero data. So today you would have to figure out a corner of the market where you could afford to start with zero data, and it would have to be big enough to be worth going after.
Yeah, we have a minute left. Can we boil any of this down into just a few pieces of advice for people out there? It sounds like data is important. You have to start, even if you're starting from scratch, make some bad loans. Sounds like is a good thing to do.
Yeah, how fast can you make bad loans? You obviously need some good ones if you want to stay in business. But I think I think that first of all, my only advice to any entrepreneur is don't listen to advice, because entrepreneurs have to have this single-minded vision that they can get somewhere. And if they listen to everybody who gave them 100 reasons why it's going to fail, none of them would ever start anything. So this advice is, by definition, of limited value. But I would encourage people to think about, big markets, not niches that can be subsumed by other players, and build into their product some measure of virality that will allow, it's not just the product itself, but it's what will allow the product to sustain itself, to extend itself, to spread in a customer base that doesn't require, brute force spending on marketing. so that you get a bigger customer set, so that you get more data back, and you can grow faster. But there are, this is early innings, and I still think there's a lot to be done in financial services and in lending in general. So I have no doubt that there are some entrepreneurs out there who will be stubborn and will come up with things that we haven't even thought about so far.
Right, great. Well, thank you very much, Neil, and thank you for listening, and thanks for having us.
Thanks a lot.